Nio has dropped to a very attractive price. Welcome back to the channel. Today I want to talk about Nio stock and why I think that this is a great value at the current price. There is a lot of fear and doubt surrounding Chinese stocks, and in this video I will discuss why this should not apply to Nio. I will look at the very latest developments coming from Nio that have led analysts to issue buy ratings and increase their price targets for Nio stock. So if you find any value in this video, can you kindly tap the like button? It really helps the channel grow. I'm aiming to get 200 likes on this video. Help me achieve my goal. And if you are new to the channel, consider subscribing. It costs you nothing, but it could make you a lot of money. And make sure to pop over and check out my Patreon page, where I'm bringing the latest bangers that I believe will make huge gains this year. Making videos takes hours to do, so this should allow me to bring you vital information far quicker. Since December, some of the stocks that I have looked at on the channel have made huge multi-bagger gains. Petratech Energy, which I've been talking about for months now, reached an all-time high this week of 40 cents, meaning that this is my first 1000% stock of 2022 already. But we have also seen big gains over the past 2 weeks at Ascent and IQST. So I would really appreciate a show of support and smash the like button and help this channel grow. This is not financial advice. I encourage everyone to do your own due diligence. Now let's get into it. For anyone who is new to Nio stock, I have made several videos about Nio over the past few months, so check out my previous videos. Nio is a pioneer in China's premium electric vehicle market. They design, manufacture and sell smart and connected premium electric vehicles, driving innovations in next generation technologies in connectivity, autonomous driving and artificial intelligence. But I have covered all about Nio, the company, in previous videos, so let's get straight into the latest news. Beijing gives Nio the green light. Beijing signals to the world that investing in Nio and its peers is not as risky as before. In addition, solid deliveries in Q4 give reasons to be optimistic about Nio's future, and as a result the author here is long on Nio for the short term only. As we all know, the tensions between China and the US has seen a lot of Chinese stocks suffer over the course of 2021. But this is a new year, and the latest political developments in Beijing suggest that Chinese automakers will be able to continue operating their businesses as usual without worrying too much about further oversight from the state in the foreseeable future. As a result, stocks like Nio, which have been in the decline for the whole of 2021, have decent chances of rebounding in the short term. Now, this article is written by someone who has not always been long on Nio, so I feel that this gives a good view of the progress that the company is making and the shift in the macro environmental issues. In November, the author here highlighted how Nio was underperforming against its competitors and how it struggles to reach the same growth rate of deliveries in comparisons to its domestic peers. This is something that is a very valid point, and I will discuss this later in the video, where I will compare the delivery figures of Nio with its Chinese rivals, but also assess the opportunity for Nio stock. However, it seems that the sentiment is slowly changing, and it might be time to turn over the table and purchase some of Nio's shares while they're still trading at their 1-year lows. So what has changed to make Nio a buy? In recent weeks, several things have occurred. First of all, the Chinese regulator clarified that there's no plans at this stage to ban the use of the VIE structure, which companies such as Nio use to assess foreign capital markets for the existing businesses that are already listed overseas. Secondly, and even more importantly, China has finally scrapped limits on foreign investments in its auto sector, giving the green light for foreign investors to participate in the growth of the country's auto industry and minimizing the risks of owning stocks such as Nio for non-Chinese nationals. Now, this does not apply to all Chinese listed companies, but it will apply to all Chinese automakers. In addition, the latest developments within Nio also leave room for optimism. Just a couple of days ago, the company had announced its Q4 delivery numbers, which were much better in comparisons to the weak delivery numbers of Q3. Despite delivering only 3,000 vehicles in October, Nio managed to quickly retool its factories and delivered a total of 25,000 in Q4, making over 10,000 deliveries in November and December. And I will compare this later to Nio's rivals, as well as Nio's sales outside of China, as Nio has begun their worldwide expansion. Going forward, it's now safe to assume that investors should expect a greater increase in monthly and quarterly deliveries, as Nio seems to be finally successfully dealing with the ongoing chip shortage crisis and is about to launch 2 new flagship electric sedans later this year. On top of that, due to the massive depreciation of its shares in 2021, Nio now trades at a forward PS ratio of 9x, which is below the forward PS ratio of its competitors such as Xpeng and Tesla, which trade at 14 and 21x respectively. Since the Chinese EV market is expected to grow at a compound annual growth rate of 31% in the following years, Nio will likely be able to increase its value and trade at similar multiples of that of its peers going forward. So what are the big risks for Nio? There are 2 major risks for Nio stock right now. First of all, even though Chinese regulators said that it has no plans to ban overseas listings through the use of the VIE structure, it doesn't mean that they won't change their mind in the near future. Then there is the risk that the company's stock will be delisted from the US exchanges if it continuously fails to comply with the Holding Foreign Companies Accountable Act, which was passed a year ago. That is what makes Nio risky in the long term. Overall, it gives an opportunity for Nio stock to appreciate in the short term. In addition, the aggressive growth of deliveries in the past 2 months and the upcoming releases of new electric sedans are giving reasons to be optimistic about Nio's future. The author of this article believes that at the current levels, Nio stock could be considered a solid rebound play, as it has everything going for it to appreciate in the short term. And I agree with this at a minimum. I don't see Nio as risky at all at the current prices, but in the long term, uncertainty regarding China and US relations could prove problematic, but I don't see this being an issue for Nio in 2022. Something that a lot of investors seem to forget about when assessing Nio is that this is far more than just an EV manufacturer. Often I see Nio's sales and delivery numbers being compared with other EV brands, but Nio does much more than just produce electric vehicles. Although Nio is mainly known as an electric vehicle company, I think it is more accurate to describe the company as a technology company. Similar to how Elon Musk has repeatedly said that Tesla is not a car company, Tesla is a technology company that also makes cars. Nio is similar. Although Nio is known for its cars, the company also operates Nio Life. This is Nio's lifestyle brand, where Nio are working with hundreds of designers around the world to create the entire Nio ecosystem. Nio Service, where the original Nio vehicle owner is entitled to lifetime free warranty, roadside rescue and car connectivity services. Nio House, Nio Power and Nomi, which is one of the most advanced in-car AI assistants developed by a Chinese company. What I find amazing is the level of ownership benefits that Nio offers to its car's first owner, such as lifetime free battery swaps or lifetime free power service. This really does encourage brand loyalty and really rewards the owner who buys the cars new direct from Nio. Just yesterday, Nio signs deal with Highway Service Area Operator in Zhejiang to jointly build swap stations. This is the 4th such partnership in the past month and a half. The 2 companies aim to build battery swap stations in at least 15 pairs or 30 service areas by June 2022, allowing Nio's battery swap network to complete coverage of Zhejiang's highways. This comes after previous announcements of similar strategic agreements on November 23rd, December 15th and December 28th. As of January 7th, Nio has 780 battery swap stations in China, 205 of which are located along highways. So will Nio stock make a comeback in 2022? Deutsche Bank thinks so and lays out a roadmap. In a research note sent to investors on Tuesday, Deutsche Bank analyst Edison Yu said they expect Nio's marquee product development efforts to become reality in 2022, which should help the stock recover, and laid out what they see as a catalyst plan for 2022, which, as we can see here, begins with the ET7 delivery starting in March. And the team believes that Nio will likely complete its primary listing in Hong Kong by the summer and be included in the Shanghai Hong Kong Stock Connect by the end of the year, alleviating any remaining concerns about delisting in the US. The team reiterated its buy rating on Nio and its $70 12-month price target. Edison Yu is not the only analyst to be raising price targets and reiterating buy ratings for Nio. There are many analysts who feel this stock is grossly undervalued at the current price, which I will look at in just a moment. William Li unveiled the company's plans for global expansion at Nioday 2021 event, saying Nio will enter Germany, the Netherlands, Sweden and Denmark in 2022. The company has already entered Norway, Nio's one stop, and opened its first overseas Nio house in Oslo back in October. Edison Yu's team mentioned that traffic at the Nio house appears to be robust judging from social media videos, and that Nio's fairly slow delivery in Norway may be due to the company's desire to de-report service and charging infrastructure to maintain a seamless high-end user experience. If you are not already aware of the Norwegian market, electric cars made up nearly 2/3 of Norway's new car sales in 2021, with Tesla the top-selling brand overall. Despite a small population, Norway has the highest proportion of electric vehicles, while China is by far the biggest overall car market. While small, affluent Norway is seen as a key market in which to gain a foothold for new BEV players, including Nio and Swedish EV Polestar. We can see here that just 5 years ago, EV made up little more than 10% of Norway's new car sales, but within the next 3 years, EVs will make up 100% of the market, as Norway look to phase out ICE models. But that's not all. If we add the number of hybrid cars too, this brings it up from 65 to 87% of the market in 2021. Nio launched its first non-China Nio House showrooms in Oslo in 2021, aiming to sell its ES8 sports utility vehicles and ET7 sedans as part of plans to expand globally, but also plans charging and battery swap stations too. So what do analysts think of Nio? 8 analysts have set 12-month price targets for Nio stock in the past 3 months. The average price target is $61 with a high forecast of 87 and a low forecast of 45. This average is 111% upside from the current price. Looking at market beat, we can see that Nio is currently at the bottom of its 50-day range and 52-week range. This indicates that although Nio stock has dropped significantly, it is very likely to be undervalued right now, and the market cap for Nio is only about $45 billion, which is very low compared to sales. With institutional ownership currently about 29%, although there has been more selling than buying over the past 12 months, this is not surprising given the fact that this stock has gone from as low as $1 in 2020 up to over $60 in 2021. And we can see that the 3 most recent ratings have been set during Q4 by Deutsche Bank, Citigroup and Mizuho, who have all rated the stock as a buy and given price targets of $65, $87 and $70 respectively. So why is Nio stock dropping if analyst price targets are so high and the risks from China have been lessened? One major reason is anticipation the Fed will raise rates, sending stocks lower. This week, stocks slumped and bond yields rose on Wednesday. The S&P 500 fell 1.9%, its biggest drop since September, as technology companies led a broad market slide. The Nasdaq fell 3.3%, its biggest decline since February 2021. And the Dow Jones Industrial Average fell 1.1%, pulling back from the record high set a day earlier. So what is happening at Nio is not unusual. This is across the entire market, and when this happens the stocks drop so low, this can provide a huge buying opportunity, although it is very hard to judge where the bottom is. But certainly for anyone with a high dollar cost average and long-term conviction in Nio, this is a chance to average down. So I said earlier in this video that I would look at how Nio Deliveries compares to its domestic rivals. Xpeng maintains its lead in both November and December after having the highest delivery volume of the 3 companies in October. Nio's 10,000 units was third behind Xpeng's 16,000 units in December and Li Auto's 14,000. And we can see here, looking at the chart over the past 18 months, that although Nio has had very impressive growth, it has lagged behind both Xpeng and Li Auto over this period, with Xpeng in particular experiencing growth from less than 1,000 deliveries in May 2020 to over 16,000 in December. Nio's deliveries were the lowest among these 3 companies and also had the lowest year-on-year growth rate. This still seems to be limited by capacity, and the company's executives previously saying that the number of batteries supplied by CATL is still the ceiling for deliveries. It's also worth noting that Xpeng and Li have both begun deliveries of new models and introduced facelifts to existing models. Nio, on the other hand, has no new model deliveries for the entire year 2021. Nio announced the ET7 sedan last January, which will begin deliveries in March, and the ET5 sedan on Nioday in December, which will begin deliveries this September. Despite this, Nio did deliver 25,000 units in Q4, so that was within previous guidance of 23,500 to 25,500. However, both Xpeng and Li Auto exceeded guidance figures, but there is one difference between these companies that cannot be ignored. Nio targets the luxury car market and aims to take the market share of fuel cars from luxury car companies like BMW, Audi and Mercedes-Benz. Xpeng targets the broader market, hoping to attract a younger demographic, and Li Auto targets families with children, becoming one of the top choices for young parents today. In terms of pricing, Nio has the highest priced models of the 3 SUVs currently on sale. The cheapest, the ES6, starts at RMB of 358,000. Xpeng's most expensive model is currently the P7, with the price range starting from 219. So Nio's cheapest EV starts at nearly 150% of the price of Xpeng's most expensive model. In terms of the average sales price, Nio is the highest of these 3 companies and Xpeng is the lowest. In China, Nio vehicles rank 4th in average sales price, below Mercedes-Benz but above Lexus. So as you can see, delivery numbers are only part of the story. Of course, Xpeng and Li are going to sell more EVs, they are aiming at a much broader market. What is important is that Nio is achieving their guidance targets, which they are. So guys, that brings us to the end of the video. If you've watched all the way through, please hit that like button, it really helps the channel out a lot. Drop a comment and let me know what you think is going to happen in the coming months. And make sure to pop over and check over my Patreon page, where I'm bringing the latest bangers that I believe will make huge gains this year. At the current price, I really see very little downside for Nio stock, with large potential upside, and the professional analysts feel the same too, with the lowest price target over the past year still being 50% above the current price. If you're new, subscribe, turn on notifications, and I'll catch you in the next one.